Hey everybody, so it's a minute or two before 4. We'll be getting started in just a moment or so. Reminder, those of you who are new, there's a little chat button on the bottom of your Zoom login if you're in Zoom, and of course chat function in social media channel you might be on to ask questions. We'll address those questions potentially throughout, but definitely at the end we open it up to answer any and all questions. I have my associates Larry and Rich on, who are paying attention to all the questions coming through, and we'll ask those questions here live towards the end of this webinar. I'm going to be pleased today to also introduce Jonathan Campbell, who's our head of realty sales, driving our DLP Realty real estate brokerage. So Jonathan will be joining us here in just a second, and we'll be giving you some updates. What's going on here in the world of real estate? What's going on here in the world of DLP? Get to give you a unique perspective from Jonathan here today. And then, as always, as I said, open it up to any and all questions. And then we'll touch on some of the exciting upcoming live events / virtual events we have coming up. So with that said, it looks like it's right about 4 o'clock. So we will go ahead and get rolling here. So Jonathan, you got the screen here today. So go ahead and take me to the next slide, please. All right, so quick highlight. I got featured here in a webinar I did for Forbes a couple weeks ago on our lead execution system. We've talked a little bit about this in some past sessions here about how we focus on execution here at DLP, how we've built the organization, how we run an organization focused around disciplined people, disciplined action, and disciplined thought, and how we run our organization. And some of you know I'm writing a book, or I finished writing the book. Now I'm going through the final editing on this elite execution system called Building an Elite Organization. I'll give you a great insight and understanding to what we do at DLP and how we've been able to be consistent even through these COVID times. So encourage you that we'll send it out as well to check out the podcast and learn a little bit about the internal operations here at DLP. So go ahead, John, the next slide. Another cool thing I'm proud of is that we've been out and about here in the community here through COVID. So my wife actually started this a few weeks back, and she decided to go fill up a bunch of carloads of food and take it to a local food bank a homeless shelter food bank in the St. Augustine area. And that spurred some of our team members to do the same. Here in some of our other markets like Pennsylvania, we went out and donated a bunch of food just this morning out of the Catholic Charities in Allentown that you can see there. That was led by Jen LeConte. So awesome job, Jen and team there. Next slide. So some state openings. So you guys might be noticing I got a little bit different background behind me today. That's because I'm talking to you from Asheville, North Carolina. So I can talk to you from some real life experience to what's happening here. I actually got here on Friday of last week, which was the first day of this phase 2 where restaurants and businesses could start opening. And they have Friday, probably I'd say a third of restaurants and businesses were open as of Tuesday, probably more than half, and a lot are opening here on June 1st. So it's definitely quieter here than normal in Asheville, and I'm sure throughout North Carolina. That picture you're looking at there is here in Asheville. But overall, business people getting back to normal here, restaurants opening, 50% capacity, just like in a lot of other states such as Florida. So it's been pretty cool to see for sure, and it's given me the confidence, which we'll talk about later, that we will be able to hold our event live here in a few weeks. So that's pretty exciting. Next slide here in Florida, pretty much been kind of now the new norm. We've been reopened now for 3 or 4 weeks. Restaurants open. They say 50% capacity, but that's 50% of the fire marshal's allowable number of people in a restaurant. So it really means, for the most part, restaurants and a lot of businesses are operating pretty darn close to normal, just with their tables a little more spread out. For those of you not in an area being open, and I can tell you, St. Augustine, much of Florida is back and alive and open, which has been exciting. And then Pennsylvania, finally getting some exciting news. So real estate sales became essential last week, which Jonathan will talk a little bit about. But now Lehigh Valley and the eastern side of Pennsylvania is going to be fully open on June 5th. We'll be moving to yellow, meaning restaurants will be open, outdoor seating, and basically be at the stage where much of the country, such here as North Carolina, is at. So that means we'll be reopening our headquarters offices in Bethlehem. which we're super excited about. Our people are super excited for. Lots of good stuff happening there for sure across the board. Feels like finally, but really, really exciting. So speaking about Pennsylvania and Bethlehem, I have Jonathan Campbell on here with me, who is in our Bethlehem office, has been running and leading our real estate sales team now for many years, after being our number one salesperson for quite some time. Been on our team, I think, 8-9 years now, and has been having some fun here going through the COVID timeframe and being told his business is no longer essential and he's not allowed to operate. So, and under Jonathan's leadership, if you go to the next slide there, we've had some pretty amazing growth. So you guys here as our capital investors don't hear as much about our real estate brokerage, maybe as you hear about our lending business and our management business and our growth in our portfolio. But we haven't stopped growing our real estate brokerage, which started back at the beginning. It was my first business back in 2006. In fact, we are the number 11 real estate team in the U.S. by the Wall Street Journal. 5th straight year, we've been in the top 15. Number 1 in Pennsylvania and New Jersey, I think, for the 6th straight year. And we were just named a couple months ago the 8th fastest growing real estate brokerage in all of America. So that's pretty cool. And Jonathan, move to the next slide. You'll kind of see from where we were at a decade ago, after 3 or 4 years of growth, to where we finished last year, nearly 10 times the growth from 2009 to 2019. This year it's going to be tough to maintain that kind of growth, but we're going to still have a really great year, despite kind of some of the slowdown we faced in Q2. We're going to make up for a lot of that in Q3, Q4. So over most of these weeks, you guys have asked questions that have been typed in here, and you guys have asked that I go through at the end, and we kind of brought some of them forward here. I get the pleasure here this week, as I did last week with Melanie, to let Jonathan take the heat and answer some of these questions, and I get to be the one asking them, although many of these questions have come in from you guys. So let's go to the first question here, Jonathan. So tell us, I mean, we've been open now a week or so. So what's happening in the real estate market? How are we selling homes safely? How is COVID affecting home values? Tell us a little bit about what's happening in your world.
Yeah, so thank you. And the funny thing is yes, these are the questions that we are getting asked all the time from consumers, customers, clients, you name it. This is what's going on. Everybody wants to know, how's the market? How do you sell a home safely? And how much is my home worth in this COVID environment? And so what we've done and what we've seen is there's a lot of national news that's out there saying like home sales have dropped 18% in April. And yes, that's true. And they're wondering, when is this whole thing going to crash? And I just wanted to give you confidence in what is going on right now, because the national news doesn't understand, or they might understand, they just don't want to tell you. They don't understand that, hey, when you're shut down, you can't sell the house anyway. So what's ending up happening right now is the consumer confidence is at an all-time high right now. We are having a ton of showings. I believe that's actually on this next slide here, that in Pennsylvania alone, as you can see here, no showings for about a good 30, 45 days here. And what ended up happening was when we got released just last week, our consumer demand with all the pent-up buyers, everything that's going on, has actually exceeded last year's average weekly showings. And the great thing about that is that the massive opportunity for not only buyers, but sellers as well is just incredible. Buyers are still buying and sellers are still selling. And that's just our name of our game that we're talking about day in and day out with every single one of our clients.
So Jonathan, so make sure everybody sees here. So this purple kind of semi-flat line, and this is from Showing Time. So this is the largest source of data for home showing. So this is a service that almost all showings are set up, or at least the vast majority of realtors set up their showings through this service for quite a number of years now. And so you'll see this generally almost flat number of showings in 2019, steadily going up as the spring market enters there. And then you see in the orange line, what you're showing us is what was happening in 2020. So we were right on track, actually a little bit above pace with 19, looks like, through basically around March 12th when kind of the world changed, right? And then it dropped off and almost no showings, as Jonathan said, when we were not allowed to show homes, when the government said we can't. And then you see as the state started reopening, some of the state opened sooner than Lehigh Valley, but as showings have been able to restart, you see how it skyrocketed. And now in the last few days, it looks like we've drastically surpassed 15.4% greater than last year. And I think we'll see that trend continue over the weeks ahead.
We are, and I don't see any change in that. And not only that, just to talk on, obviously we're talking about Pennsylvania because our local Lehigh Valley market, but I'm proud to say that it's across North America, that this chart, it's not as big as of a spike because of how Pennsylvania is drastically held off. And then we were opened up all of a sudden. But in North America alone, this was more of a gradual V shape, as they call it, more of a gradual one. But the good news is that it's exceeding last year's showings. So it tells me and tells our consumers and tells our clients that, hey, consumer demand is here. Buyers want to buy. And in my opinion, when you have buyers that went through all the dilemmas of unemployment, went through all the hardships of COVID, and now they're able to still buy, that's one of the strongest buyers you can ever have in real estate. And so we're starting to see prices not only just stay stable, if not increase on the residential side, we're just seeing incredible demand for real estate right now.
So through this COVID time, Jonathan, obviously we dealt with a lot of challenge that we weren't allowed to do home tours. And then of course, home sellers didn't want to, waited to put their homes on the market. And there was a lot of challenges. We were still selling homes, certainly less. But one of the things that I thought was really amazing during that time, and I can speak to a smaller segment of data than you can speak to here, but, because I had about probably, I checked this data actually this morning. So I had about 30 houses that I own that we took to market in March and April and early May. So these are homes that we had rented and now the tenant moved out and we cleaned them up. We were doing that through the COVID time and we put them on the market, or we own some houses with a home flipper in a partnership that he's renovated and put on the market. So we've had a bunch of homes that we took to market, around 30 over, the 75, 90 days kind of through COVID and things shut down. And I was checking, only 2 of those houses out of 30 or so houses, only 2 I didn't get multiple offers on. Mm-hmm. So almost every single house, not only did it go under contract within a week or 2 of going to market, but I got multiple offers when showings weren't allowed. In almost every one of those cases, we exceeded our targeted price on those homes. So certainly that was those homes got an advantage that they, were vacant and we didn't face the challenges that an occupied home has. But we weren't getting people throwing those low ball offers. We were getting multiple offers, doing highest and best, which is where we go to all the offers and say, all right, bring me your highest and best offer. And then we were getting many cases where people were paying over our asking price through COVID, through all the uncertainty and all the craziness that we all hear in the news. We were seeing that. So talk to us a little bit about how we're seeing what you're seeing now since that passed and through that time in terms of when we put a home on the market, what are we seeing in terms of prices? And then also, since you're guiding, our salespeople who are going out and meeting with the home sellers, are they coming in and when they pull the comps, are they coming in and saying, hey, we're going to adjust down the comps because those homes sold pre-COVID, so prices are now lower? How are they looking at values now?
No, we've actually seen a very stable from an appraisal standpoint. We've seen very stable from that standpoint. But one thing I do want to bring up to everybody is that we made national news as the #1 marketplace in the whole entire country, in all of North America, as being the #1 marketplace, the Lehigh Valley, #1 in the marketplace as far as inventory drop in the market. It was an 81% decline from this time last year to now. And an 81% decline. And what that means is that a lot of inventory came off the market. And as simple economics goes, the more demand with less supply means that home prices are always going to stabilize. They're always going to go increase. So we're actually seeing an increase. So we're advising our clients. Obviously, it depends on each market. We run what's called a market absorption report on every single one of our listings. So we're advising them that, hey, in this time, when you're seeing multiple offers, you can actually start to adjust your pricing up a little bit in this time. So, and that's what we're seeing right now. We're still seeing a ton of showings, a ton of houses. And one interesting fact, and we'll talk on this for sure about virtual showings, and we'll get into that. But it was amazing to me that when we were taking home buyers out to, we weren't even taking them out to homes. We were on Zoom calls just like we are right now. And we were showing them houses from a seller, because these were the restrictions that we had. We couldn't take any photos of any houses in Pennsylvania. We couldn't take any buyers out to homes. And what we were able to do is we were able to get them into the home by having the seller be on their cell phone, be on a Zoom call, and walk them through the property themselves. So what ended up happening was we put a lot of homes, we were basically putting a home under contract every single day during this process. And the thing that was slowing us up is that we weren't allowed to truly get through the closing. There was some, you weren't allowed to get appraisals done, and there's a lot of hiccups there. But the one thing I wanted to point out is that when we were just opened up last week, a lot of these buyers went out to go see their houses, even though they've never seen these homes. They've only seen them virtually. And we ran a survey with all these clients, and it was amazing. We only lost, I can count them on my hand. There's three deals only out of the 70 plus homes that we put under contract at that time. There was 3 homes that they just didn't like it based on what they didn't see in the video. So it just really spoke to what we were able to accomplish during that time, and what the market is capable of doing, and the buyers just wanting to buy houses right now.
Awesome. And one of the things, Jonathan, I think worth mentioning, and I do these quarterly reports that I do to our investor base for many years now. And in part of these quarterly reports, I give all this data of, where are we at with inventory in the market? Where are we at with list to sale ratio, meaning how much our home selling versus sellers are asking? Where are we at with, home prices and all these different data points? And almost every quarter, I could almost say the same thing. It was, we're at all-time low inventories. We're at all-time low inventory. So for Jonathan to say we had the biggest drop in inventory anywhere in the country, we were already at all-time low inventories, and now we're 81% lower than that. So it just shows how dramatically little inventory there's been on the market, which will certainly, just here at DLP, we're going to change that over the next couple of months ourselves alone by how many homes we're bringing to the market. But still, there's just an immense undersupply of homes. So you talked about this one already, how you're able to sell homes there. So let's move to the next slide here, Jonathan. So here's some of the kind of cool things that you were talking about. So walk us through some of this stuff, some of the cool things we did when you weren't allowed to show homes. And I know some sellers, and I think it's probably worth mentioning, not everybody wants to do home tours yet. Not every buyer wants to go out and look at homes. Not every seller wants to let people through their homes yet. So I know we're still doing a decent component of some of these things now, even though legally we can go out. So talk a little about this.
Yeah, we are. I mean, I have an agent right here, right now, Tim, who just told me a story that he put a home under agreement, even though we're allowed to show homes. He did it virtually last night and walked them through the home, actually with his cell phone camera. Now, he went to the property. His clients were sitting in the home. I'm sorry, they were sitting in their own home, so in the comfort of their own home. And he actually went out to the house, did the whole thing on his cell phone, and then put it under contract today. And it went under agreement. And so that's just a simple example of what we've done showing homes virtually, but we're still doing it today because consumers are starting to realize that there's a convenience factor to it. They're understanding that, hey, I don't need to go see 10 homes in a day. I don't need to go see 15 homes in a day. I'd rather get home from work, spend a little bit more time with my family, understand that my agent is here for me to help me out, to walk me through the homes. And maybe I can narrow that down to 1 or 2 or 3 properties that I really, really want to go see. And it takes the convenience level to the next level right now. So we're doing it right now on iPhones, iPads, Google Duo, joint Zoom meetings like we're doing right now, FaceTime. We also have a technology we're implementing on every single house is our 3D video walkthroughs. So you can literally be immersed. I can't press play on this thing right now, but you could actually be immersed in this home. So if you ever get the experience of like Google Street or being able to walk through, you're actually able to walk through the home like you're there. And it's shot in 4K, so it's very, very detailed. And just the amount of transparency that we had during this time to have direct access to a seller and a buyer connection, and then how they were shooting videos of their own home. We had a couple sellers, it was pretty funny. They actually would do like narrations of videos. And we didn't ask them to, we said, hey, like keep it simple, keep it basic. We really want to get the point across. But some of them came up and it sounded like a wildlife documentary, some of them, and they're pretty hilarious, but very detailed. And they got the home sold. So that was all the whole point of this. But our team was just incredible over the time. It was all about the team because, I mean, we came together at a very high level and we said, listen, we're not going to let Pennsylvania, we're not going to let this stupid COVID stuff stop us. We're going to service our clients. And at DLP, we're always solution focused. And so to have the team get together and really create, we call it the new normal now. Everybody talks about, oh, when are we going to get back to normal? No, there's no going back to normal. It's what did we do to create something that's going to be new and innovative and help our clients at a much more higher level. And that's what we're doing now. We've created the new normal.
It's awesome, John. And, it's part of this component too, are implementing things. A lot of the stuff we were working on already, self-showing lock boxes as well, tools like that just make it easier. Even if people are comfortable going out there and looking at homes, they can do so at their own comfort, at their own time. And quick funny story here, way before COVID, I've bought 2 homes in my life without seeing them, personal homes, without my wife knowing I was buying the home either, and then told her afterwards. So I've been comfortable, with what the information you can gather online and videos and Google Earth and so forth. And of course, then you go out and do your inspections and see the home. But I've done this way before hand, just by buying homes in kind of different parts of the country. More and more people that seemed crazy to say I did that, 3 years ago, 5 years ago, 6 years ago, it was crazy from the agent I'm buying it from that I would buy a home without having seen it or put it under contract without having seen it. And now we're seeing it, as you said, the new normal. I think more and more people are going to see that. We're seeing now all over Florida, they have those car deals, what they call Carvana, where people are buying cars online. I think I bought my last 8 cars online without going out and test driving and so forth. So I think, more and more people are going to adapt to being able to operate in a virtual environment. And this is kind of expediting that and giving us a unique advantage. So awesome job with this. You guys can see some of these pictures. You can go on dlprealty.com. You can see we got instructions there. Not everybody knows how to use Zoom or how to record videos or FaceTime or whatnot, and helping people be able to do so. You can see some of the examples of some of these videos and so forth that our clients have done. It's pretty cool. Awesome. So let's go to the next slide there, Jonathan. So this is another important thing. So we've been doing this. So a lot of people have heard about companies like Open Door, OfferPad, these big, people call them iBuyers, these big kind of technology companies that moved into the space of buying homes. Zillow is one of the big ones as well. So we've been doing this, buying homes from home sellers, with sellers not having to list their home, not having to deal with showings, not having to even clean the home out, closing when they want, kind of giving the control back to the seller. For many, many years, for over a decade now, we've been doing this. And as we like to say here, DLP offers all the options. So usually when somebody calls a real estate agent, the real estate agent can give them one option where I can list your home and sell it. And we found that for all these reasons we're talking about, for convenience factors, not everybody wants to have to list their home and deal with showings. Even when we weren't worried about catching COVID, you just didn't want to deal with it. It's a lot of work. It's a lot of effort, staging your home, cleaning it out. Especially, homes, people have lived in their home for a long time. We've done this a lot with people moving into senior housing or unfortunate, family members passing away or people having to move quickly due to a work change or whatnot. But we've been, again, doing this for 10 plus years. Most of the homes we've bought in DLP over the past decade plus, well over 1,000 homes have been this through DLP offers, for us just coming in and saying, all right, here's what we'll pay you for your home. Here's what it would sell for the market. Here's what we'll guarantee it sells for. So talk to us a little bit about how we use the DLP offers, what we offer, how we're using this today, and how this is playing in with kind of the COVID times.
Yeah, it's everything. So a lot of people, when they hear a cash offer, everybody thinks of a cash offer as like a complete home in disrepair and a dilapidated home and something that needs fixing. And the funny thing is I kind of thought that way too in the beginning. But it's amazing that, again, at DLP, we're all about consumer and customer building solutions for them and what they need. And all of this came down to convenience, that they wanted a way to have no repairs, no showing, no commission, no hassle, no waiting. And they understood that there was a better way sometimes to just sell their home to us. And have that convenience factor. And the reason I bring up about the fix and flip stuff is because I thought everything was gonna be fix and flip. And a lot of times people just want the convenience factor. They want to be able to get out. So when we go into an appointment and when we sit down with somebody, we can have a true conversation with them that we can offer them all the solutions. We don't have to just sit there and say, hey, no, you have to fix this and fix that and fix this. And I won't put your house on the market until this is done. And unfortunately, that's like an old school way of thinking, but you see it too often in the real estate world. But imagine if I could go in there and say, hey, I'm going to provide you all the analysis of, what you can fix and what you don't have to fix to really give you maximum money on your property. Or you can sell it as is, just like this. Or I can actually give you this this cash offer, and you know what? You don't have to worry about the repairs, the commission, the waiting, the hassle, and you can just match everything up and close on the next home. So this program in itself has just opened up a tremendous amount of doors for a lot of people that thought all their doors are closed. We have a great example that I use all the time, where a client interviewed like 10 or 11 real estate agents down in Bucks County, and it was a nice, very high-end home, but the neighborhood is notorious for having stucco issues. And what we were able to do is actually go in and offer him a cash offer, when every single real estate agent that went there said, you can't stick this home in the market until you remove all the stucco and until you remove all the siding and change all the siding. And we're like, that's just insane. So here's your cash offer. This is what we're going to do to help you out. And we have tremendous testimonials. And honestly, these cash offers and the DLP offers that we have, they create some of the best testimonials that we have out there, because the impact that it has on the changed lives that we can help is just amazing. So this program in itself is amazing, but it really is just a part of all of our seller solutions that we're offering out there.
You know, one of the other interesting points you were hitting there, Jonathan, and this isn't a pitch for us, to buy anybody here's home, but just understand the kind of ways that we operate. And one of the things that's interesting, in this market where we were just talking about, most homes that come to the market, most good homes get multiple offers on them. And so let's say a home comes on the market and it's one of us in this room here. It's a home that's the perfect home for us. We really want that home. And there's 5 offers on it. Well, if there's 5 offers on that home, there's almost no chance, if I make my offer contingent upon my other home selling, that I'm going to get my offer accepted. I'm going to be thrown out right away. So being able to go and offer a home without needing to sell my home, and a lot of people, even if they have the ability to have both homes, they don't want to take that risk. So a lot of times saying, hey, I can get my dream home, maybe I'm getting it at this really amazing price, and I'm going to give up a few dollars on selling my home, but I don't deal with any of the headaches and I don't lose my dream home. It's a no-brainer. And I think even that stucco story you gave, the guy had found his dream home and that he wanted to move into, and it was a little bit of a unique situation, but he needed his home sold and a little bit of loss there per se, not have to wait and spend all the money and come up with 40 grand to do stucco repairs and so forth. It was a no-brainer. So it's interesting how just having innovative solutions can get transactions done, can help people get to their goals, especially in times like this. And it's never been more valuable in times like COVID. So, and our ability to do this, if you go to the next slide, Jonathan, is unique. So when I started, 14 years ago or so, and people started hearing me on the radio saying, we guarantee to sell your home or we'll buy it. And then we started marketing, the immediate buyout cash offer. We'll give you cash for your home. You don't have to sell. You don't have to deal with showings, commissions, et cetera. A lot of people, heard that, and many people took us up on it. And it was interesting. A few years later, when we started then promoting our investment funds to all of you, people all of a sudden said, so this is how you can do it, because you manage these investment funds. So you have the capital to go out there and simply buy homes very easily and so forth. And that's absolutely true. And that's a unique advantage that DLP Realty has that no other real estate broker, certainly in Lehigh Valley, have, that we have the backing of our investment funds and our capital and our lending business, that we can step in and buy the home. We have the capital to do so. We can lend capital right out of our own income and growth fund. And then, of course, in some of these homes, historically, a big percentage of them, we then rent them out. We manage them with our portfolio with our property management. So it gives us a lot more options what we can do with a house than a typical real estate company. So it's, again, help really differentiate ourselves, especially in this market. Awesome. So Jonathan, really appreciate all the awesome feedback. I'm going to keep you on, though, because I bet some of these questions that come in are likely to be for you. So reminder, you can type questions in. But before we open up to questions, I want to hit a couple last items. So I'm excited to tell you, as I mentioned at the beginning here in Asheville, North Carolina, right around the corner from where I'm talking to you right now, we'll be hosting a live event June 18th. We will be streaming that live virtually as well. Not just streaming it, meaning you'll be able to watch, but you'll be able to interact. So just like we're doing right now, it's going to be same time as we're sitting here together right now. You'll be able to type in questions just like you're doing here today and ask questions live to me, as well as other top real estate operators who are going to be with me live doing a roundtable event. And then we'll be able to have investors such as you there asking live questions. So we're going to have live investors. We're going to have some of you joining us virtually. And then I'm going to be hosting a roundtable with top real estate operators, talking more about what's happening in the market, where there's investment opportunities, how we see the future of the market, et cetera. So both live and virtual event. Really excited about that. June 18th. You don't have to do much. It's going to be the same place as we are right now. And that's at the beginnings of our weekend we're doing here in Asheville, North Carolina, which now we can say is also live with these top real estate operators. So we're going to have at least 32, 33 top real estate operators flying in or driving into Asheville to spend a weekend learning, masterminding, building relationships with us and each other. So it's our second year in a row doing this same time here in Asheville. So really excited about that. And then coming up right after that, we're going to have our July 17th investor dinner in Bethlehem. Considering now we're in the yellow zone, being able to reopen, I feel confident to say we'll be able to do this event live. We may end up having a restriction to how many people we can have live in the room with us. So please RSVP right away, because if they get restricted to 100 or 200 or 300 or something, we are truly not going to be able to let everybody come, considering our last event had about 450 people. And we've only grown since then, obviously, here. But we'll also be streaming that event virtually, and you'll be able to engage and interact as well. So it'll be a big event, going to be a unique format as well there. So really excited about that. As always, you can reach out to me, Larry, Mike, Rich, Bob, talk more one-on-one. Go to DLP Crowd as well for all the materials to all of our funds. A lot of great information was just uploaded here the last few days for the Housing Fund, all the investment summaries on all the deals the fund owns, all the reporting here, all of our audits are uploaded there as well that have been completed here over the past month or so. So lots of updated content there to check out as well. And with that said, let's move to the next slide. Open the floor up for questions, questions you may have for me or Jonathan. Mic is open.
Excellent. So good afternoon, everyone. Just a reminder, you can go ahead and type in your questions in the Q&A feature or the chat function. I've got a question here from Victor that says, how are investors in the lending fund or housing fund impacted by operations in DLP Realty, if at all?
The short is really not at all. So the good news is on our end, in terms of how our investment funds utilize DLP Realty, we've had no slowdown. So our slowdowns have really been caused by home sellers not being able to get their homes on the market, or not wanting to or being willing to. As I mentioned earlier, if we put a home that we owned on the market, it flew off the market with multiple offers. We had no slowdown. In some ways, I'd argue we may even get higher prices due to so much less inventory on the market. So we had no holdbacks. We bought just as many kind of homes and properties as normal on the single family side. On the multifamily side, we have slowed down acquisitions over the month of April, May, as we were kind of recalibrating and seeing how values recalibrate and whatnot. But very, very little effect, if anything, for the funds at all on kind of the state shutdowns on realty.
Excellent, thank you. And we have another question here that came in from Derek. It's multiple questions, so I'm going to go ahead and read them off. They're all related. How is the lending market performing in the current environment? Do you anticipate that it will continue to generate double-digit interest rates? And as more investors enter the lending market, do you expect rates to decline in this asset class? Yeah,
great question. So first, in terms of how we're performing, so really excited to say month of April and now the month of May. And I'm not telling you that this is to be expected, that I can say this every month, and that if this wasn't as good as what I'm about to say, it would be any major bad sign. Because normally in each month, we get a few loans that go delinquent. That's normal in this business. We have hundreds of loans. But in the month of April and the month of May, no loans went delinquent. Every single one of our borrowers paid. Despite everything you hear in media, despite certainly some challenges. I mean, Pennsylvania is our #1 state we lend in. Yet none of those borrowers, nor any of our borrowers anywhere, didn't make their payments, even though they faced some restrictions for a few weeks. So on that side, our portfolio is performing really well. The only real negative that COVID has caused on our lending fund on the directly to how we originate loans is it did slow down a lot of transactions. A lot of transactions sort of got slowed down and got delayed. So that slowed down a little bit here this past month or so, our origination volume, as deals kind of got pushed out. But we're expecting to have by far our biggest month ever in the month of June in loan originations, as we've built up a tremendous pipeline. In terms of interest rates, so our interest rates have been in the low 10s in terms of the coupon that the borrower pays, and our returns to you as investors have been north of that, historically average over 13, over 11 every period and since we've been live. And actually since COVID, we've actually increased our rates on average to new borrowers by about 1%. Existing borrowers, we haven't increased the rates. So I expect to see a blended increase in rates over the next rest of this year, probably a quarter to 0.5% higher average interest rate to where we're at right now, which would put us in the 10.5, 10.6, somewhere in that type of range. And I don't think there's going to be tremendous pressure. Even though 4 months ago, our competitors were on an average rates maybe in the 8s and we were in the low 10s, we never really dealt with that much pressure because our borrowers felt the value in what we brought to them. And I really think now with kind of COVID situation, as lenders come back, it's going to take time for enough lenders to come back. And I really think it's going to take, really quite a bit of time, a year or 2 years or more before we see rates in a market level get back to the level of how low they were 4 months ago. So I think it's going to be easier for us to maintain our level of rates, in the months ahead, even potentially a year ahead than it was, pre-COVID.
Excellent, thank you. And so related to that, we got another question that came in from Ralph, and it's generally says, with historically low interest rates today, do you anticipate a change in the lending fund return?
So yeah, it's a great point. So in Jonathan's world, these incredibly low interest rates is amazing. I mean, they're unbelievably incredible, and we're going to get tremendous benefits from them here for DLP as a whole. Certainly, it's helping grow our real estate sales. It's also going to help us as an operator on the borrowing side. So I mean, we're looking right now on some of the permanent financing we're refinancing some of our portfolio into. This is going to sound crazy when I say this, but we're looking at locking in 35-year terms at 2.5% rate, total rate. I mean, unbelievable, right? So I mean, being able to do things like that are going to help our returns to our investors and help our cash flow on our properties tremendously. So we intend to capitalize on the low rate environment and the low rate, kind of low bank rate, government-backed rate environment. In terms of us as a private lender, there's always been an enormous spread between where interest rates have been at near at all-time historic lows for many years now. Rates on mortgages have been 3-4%, yet we've been over 10%. So interest rates on the kind of bank side going down doesn't have a direct correlation to our rates. And no, we don't expect that to affect rates we lend out for our type of short-term bridge lending. It certainly will affect the longer-term financing, which is one of the many reasons we don't do long-term financing as a lender.
Awesome. So thank you guys. So this question is for Jonathan. Don mentioned earlier how DLP Realty works together with our other companies. This question actually came from someone who we sold their home. They invested with DLP Capital, but then also take loans from us on the direct lending partner side. So could you please explain more about your process with DLP Realty as it pertains to investors, both active and passive?
Yeah, so active, obviously what we want to do is we're going to find out, hey, what's their wants and needs. So we always want to sit down with them, have a conversation with them and find out what their wants and needs are. And what we do is we help them find the deal. We help them find the actual real estate deal that might pertain, whether it's a fix and flip, whether it's a buy and hold, whatever it may be. We're there to help them find that out. Obviously, using direct lending partner, they're able to then help bridge that financing gap and then get all that done. DLP Capital is here, so I appreciate all of you guys here to then fund that through that. And then what we're able to do is, from the realty side, we're able to then find, if it's a fix and flip, we're able to find a very strong buyer, typically before the home even hits the market. We're through our coming soon listings and different things like that. And then what we're able to do is then find them a buyer for their home, and then we can have them either exit that deal or I can place them into property management, and we will then get our leasing team involved. We will then go lease their property and then go from there. So basically, that's the short end of it. And then we just rinse and repeat that process.
Awesome, fantastic, thank you. All right, so a couple more questions here, more along the lines of the lending side, Don. Derek asks, are you concerned that fintech platforms could disrupt our lending business?
Short is no, and it's unfortunate. There's a lot of good, well-intended fintech platforms out there. We know them all pretty well. Sad to say, nearly all of them are faltering right now, or have already faltered. In this space, the 5 or 6 most prevalent groups that have been out there doing a decent amount of originations are all pretty in pretty tough shape today. A few have permanently closed. A few have laid off 90+% of their staff. So no, I don't think that's going to be a major challenge. I think really people over kind of complicate or overthink like a fintech platform or something all that different or that complicated. Really, the way I like to think about it, how most of these fintech platforms are built is they raise their money to grow these platforms in venture capital. And so they grow a mindset that it's all about growing the number of loans we fund, growing our origination volume. And that's how they raise capital, because it's all based on how much volume trend they can show. And they think then, all right, once we get to a certain amount of volume, then somebody's going to come and buy us. So they're all raising money to build their technology and raising money to fund their business, and they're running businesses that lose money. And I can tell you from absolute facts, because I've actually looked at the financials for some of these groups that I know, some of these groups are literally shedding 4, 5, 6, 8, 10, 12, 15 or more $1 million a year net losses, running these fintech lending platforms, funding that by raising equity from investors. I'll say such like you, but not as smart as you guys, who are investing money into these platforms, thinking that there's going to be this big exit to somebody buying them. I don't know any of them that have actually gotten to that point of an actual exit. Many have raised another round of money and another round of money and another round of money. But they're generally, my experience has been, unfortunately, that they generally aren't guys who understand lending or real estate all that well. And they kind of think that they can just build technology around that. And then they usually, end up eventually trying to go find some actual real estate guys and people understand lending to help build these. And ultimately what I've just seen too many times is it's kind of too late for them. And they've, run into a lot of delinquency, a lot of default and really have struggled. So I think there's going to be more groups like DLP out there who are innovative and forward thinking and find new ways to make it easier for people to invest, continue to find new ways to make it easier for borrowers to borrow. And that's really what they're trying to sell, is an easier way to transact. So a lot of what we kind of talked about on the broker side, we're constantly working on doing, which is really, again, the intent of a fintech platform. But we have to do so here at DLP with the mindset that we have to do it while we make profits for ourselves and our investors, as we always have. So I hope that answers that question, but happy to answer it if I missed anything there.
Awesome. I have one more question on this side here. So Ralph, as well as John, asked questions regarding our thoughts on new construction. What is the thinking behind this move? And maybe for Jonathan, how would we incorporate DLP Realty into the sale or rental of those homes that we're building?
Yeah, so I have to not answer the new construction part, but as far as realty goes, we already are. We're already listing and selling a bunch of new construction, whether we're helping some of our borrowers actually rent up and lease up some of their new construction multifamily, which we're already doing, or whether it's actually selling just flat new construction and selling them on the open market.
Yeah, it's been, I don't think we ever really made this a big topic. It wasn't part of our investment vehicles per se, but we've been building homes for 12 years now at DLP. We've bought multiple subdivisions. We've bought scattered lots. We've done a whole lot of construction. Almost my entire construction leadership team comes from new construction. And so home building is not a new concept here at DLP. with the Bright Homes partnership last year, it definitely helped us accelerate that even faster, and definitely with some cool innovative ways like building net zero homes. But providing and building homes is far from a foreign concept to us, and is far from a new idea. Some of the things that we've done that have been unique, and what we intend to do a lot more of is, so we have a community, as an example, in Stroudsburg, Pennsylvania, called Mountain Hollow Estates, which is 139 townhomes. But we never sold a single townhome. We run it completely as one rental community. So we only rent these townhomes out. We have a few smaller communities like that in Pennsylvania, and then we have one in Gainesville, Florida, we're doing right now, which is 72 detached single-family homes. So we intend at DLP to continue to look for different ways to create value, find value, and be able to provide affordable housing in the various markets and communities we're in. And in some cases, we found being able to find and create that value through new construction. And most of those cases, it's been our ability to acquire, just like we acquire real estate at a discount, be able to acquire land at a discount due to some level of distress. We think there's going to be some of those distressed opportunities here and some of these development projects that end up having their financing tightened on them and they can't complete projects and just need to unload them. We think there's going to be some of those types of opportunities that we can build some more brand new DLP communities. And then as Jonathan said, then we can handle, DLP Realty can handle leasing those homes, selling those homes. And then as market changes, we can adjust. So example, in the last cycle, not just new homes, but we did this with new homes and we did it with existing homes. We rented a lot of those homes. And then as the market improved, we then went to a lot of those residents and we offered them the ability to buy those homes, which many did. And then if they didn't buy them, we gave them time, let them move to another property of ours. And then we turned around and sold those homes to home buyers. So, the great thing with single family homes is they give us a lot of flexibility toward your options and how you can monetize and capitalize on the investment, which we really like.
Awesome. Thank you, Don. That's a great segue into a question we're getting from our social media feeds here. Morgan asked, there was a rising trend in institutional ownership of single family rentals prior to COVID. Do you see this changing going forward? And is DLP looking at entering this market?
So yeah, it's a great question. So I do expect institutional ownership of single family to continue to grow. I think the way a lot of these groups have built, and there's been so much equity raised to do these types of platforms. And I know a lot about a lot of them and know a lot of the head guys at many of them and have talked with many of them over the last few weeks. And most of them really have already, they are committed to this business model. And they're seeing the same benefits we're seeing, of course, that especially the ones managing well, that they're collecting the majority of their rent, occupancy is strong. Which is in many ways, despite the fear and panic that came in the institutional world, is actually in many ways, I think, helping validate the strategy that single family rentership is a real asset class, a real investment asset class. So yes, I anticipate to see that continue to grow. And I think a lot of things like the virtual nature of a lot of the sales and leasing that we've all seen and the industry accepting that more is going to help these guys scale better. One of the hard things is having physical boots on the ground to cover all these homes. So the more they can centralize and streamline, the easier it is to scale. So I think that trend's going to continue. I still think the hard part of single family rental portfolios, when you think about existing single family homes, especially in places like Pennsylvania. In Pennsylvania, it's a little easier in places like Florida, but in Pennsylvania, the average home was built in the 1950s. And so, they vary drastically, but we got all different types of construction, all different types of roofing. We have septics, we have wells, we have so many differences with all these houses, so many complications that it makes repairs and maintenance very, very difficult. And it's much, much, much more expensive to handle the maintenance and repairs of these homes than it is compared to multifamily or compared to single family new construction, where not only is everything newer, but they're all built the same. We know what the products are. We can streamline it because we only have one window. We only have one type of floor. We only have one type of cabinet. We know what's in every house. We can troubleshoot issues over the phone. Not every home is its own project of figuring out, what's going on here. What type of water heater do we have? What type of air conditioner do we have? So we think new construction, single family is a much more efficient way and ultimately much more profitable way to scale in single family. And what we've found and figured out is that we can build brand new single family homes at lower prices or at higher cap rates than we can buy 50-year-old homes. So all the way around, it's a no-brainer. And without the boots on the ground, without the construction arm, you can't do that. You have to buy existing homes. Most big institutional groups don't have that infrastructure where they can build brand new homes and do all the legwork behind that. But that's how we see our focus on single family and is with new construction more. And then also by focusing on getting some level of density with community type focus and single family, get closer to multifamily efficiency. That doesn't mean, and if down the road, I highly, highly, highly doubt we see any of this anytime soon. But 5 years from now, 10 years from now, there's some major disruption in single family values, and values drop a lot like they did in 2011, 2012. And now we can pick up homes at a major discount. Would we be a big buyer again like we were in the last cycle of existing single family homes? Absolutely. But one of the things that's actually going to help avoid that from happening is the institutional base. Because if property values drop, that's going to actually increase the buying from institutional groups, which is going to actually help buoy the home value market more so than in any cycles in the past.
Excellent. Very good. So switching from single family to multifamily, we've got another question from Derek asking, do you see more investment opportunities in core plus or value add?
So everybody uses a little bit different terminology. Those who aren't familiar with these terms at all, core plus are buying, generally stabilized assets, usually in, strong markets, and just sort of, clipping a coupon on it, per se. It's already managed well, it's already running well, and you're kind of buying a bond almost, it's kind of the thinking. I'll give you the reality though, is it's never that easy. Managing real estate isn't ever as easy as clipping a bond, no matter how well performing that asset is. It's a lot of work, but that's kind of the thinking behind it. And that's how the big institutions kind of sell it. So we always need a component of value add in that we need a component of value creation, because we're never going to be able or willing to pay market. So we've bought assets that are very nice and good physical condition, but they were mismanaged. We've bought assets that are nice and really good condition that are managed reasonably well, but there's some sort of seller distress that's causing a need to sell quickly, that's creating an ability to buy at a discounted price. The short thing that matters for us is the ability to buy at a discount to where real value is for a deal that was be able to be marketed and sold and managed well, where it would be able to trade at. So for us, that means in general, we need to be buying properties that we can achieve over an 8 cap rate, which you can't achieve that over the last years. You haven't achieved that heavy value add, even if you're buying at market. So we do think we're going to be able to find more opportunities to buy deals built in the 90s and 2000s, newer properties that generally are in better physical condition and still get the kind of yields that we were targeting, because we think there's going to be a good amount of mismanagement in terms of the physical asset, and then financial mismanagement that's going to create distress caused by banks demanding loans being paid off, investors demanding return of capital, things like that. They're going to create some great opportunities for us.
Excellent, thank you. And in our Q&A feature, we are going to shift. We have a question here on the funds itself, particularly the housing fund and deployment, which is a common topic we get in our capital webinars. It says, what is the timing of deployment of invested funds in the housing fund, and how is invested capital handled while waiting for deployment?
Yeah, so great question. So in the housing fund, when you subscribe to the housing fund, we can give you the option of a capital call structure, which means you can subscribe today, sign all your documents, and if you're earning money on that cash somewhere else, and you want to wait, we can then give you 15-day notice to when we're able to deploy it, and then you can wire it in then. So that is an option. We don't do that option, frankly, all that often, because what we find more times than not, number one, the investor is just sitting on the cash, kind of waiting anyways. They might as well get it over to us, is how most kind of operate. And then also generally and historically, we've been able to deploy pretty darn quickly. So historically, we've deployed capital across our funds in an average of 2 to 3 weeks. It varies all the time, and it's a tough thing to do. And it's a tough thing to manage here because we have to manage a couple variables. Number one, if we're not going to, of course, and you wouldn't want us to ever rush and invest money into a deal, whether it be a loan or a property, simply to deploy money if there's more risk in it, right? So we're not going to take additional risk just to rush and deploy money. Also, we can't deploy your money if we can't yet use it because that hurts everybody else's return. So if I have cash sitting, that drains the yields of the fund. So those of you in this meeting, like many of you who are investors, you would be pretty upset if you found out I went and deployed $10 million in new investor capital and your returns dropped by 1% because we were sitting on all that cash, right? So it's not fair to existing investors. So we have to manage that balance well. And historically, we've had a number of tools that help us do that, such as our warehouse facilities with banks, that we get to use them as a cash management tool where we can draw money and pay it down. Over the last month or two, we haven't been using those types of facilities due to the COVID environment. Within the next few weeks, we will be opening a couple new warehouse facilities that will help us with using those tools as cash flow management. So with that said, whenever you're ready to invest, if it was today, if it's a week from now, you talk to me or Rich or Larry or Bob or Mike, hey, I'm going to go into lending fund. I'm going to go into lending fund. How long do you expect to deploy? And we'll give you an expectation, give you an idea to how long we think it's going to be. And sometimes that can help you even dictate, which fund makes sense to go into. In general, we expect over future ahead, the housing fund is going to deploy money the fastest because it's the most flexible. But it'll vary with time, and we might be able to tell you, and we might be able to say, hey, right now in the lending fund, we think it could take up to a month to deploy your money. But the income and growth fund, we think we'll be able to deploy your money in a week or two. And we'll be able to give you that kind of guidance. But then, always know that we're going to give you our best estimate. So we could be thinking, all right, next Friday, our lending team's telling us 10 million of loans are going to close. And then a bunch of those loans get extended due to something like COVID. And now it gets delayed. It takes a little more time. So that's a challenge we have to deal with. But I have to say, if in all your time with us, you look and you invest with us for the next 5 years and you had to wait 30 days to get your 12% returns, and then you were earning those kind of returns the rest of the time, it's kind of a small challenge to deal with for us not to take risk, undue risk, and manage our capital effectively. So that's a kind of a general answer, I guess you'd say, but we can look at the situation based on how much you're investing and where we're at in time and where you'd be in the deployment schedule.
Excellent. Thank you, Don. And again, we're running out of time here, so we're going to take one more question that came in from Ralph. And he asked, demographic trends point to a move from biggest urban areas to mid-size and smaller cities. How does this factor into DLP's market strategy?
Factors seem great because we're not really in any major market. So so I definitely, I think that's a logical assumption to make. And in my mind, that makes sense. And I think to a lot of people that makes sense, that people thinking something like COVID happening again, why would you want to be sitting in New York City? Especially if now you can, work from home and so forth. And I don't think there's any doubt about it. The trend of people being able to work from home and work remote will only expedite and continue, which, I'm sitting here talking to you from Asheville, North Carolina, which is an incredible place. You probably can't see much behind me. But I got to tell you, no offense to those of you living in Charlotte, because Charlotte's a really cool place. But I would choose to live in Asheville, North Carolina over Charlotte, North Carolina any day of the week. 2 weeks ago, I was hanging out in St. Simon's Island, one of my favorite places where we have a lot of real estate. And I would choose to live on the ocean at the beach in St. Simon's Island over living in Atlanta. No offense to those of you living in Atlanta, any day of the week. And I think a lot of people would as well. So I think that in general, it makes sense to think that that's what's going to happen. And for us, that works out really well because we generally invest in secondary and tertiary markets that are going to benefit from the migration out of the large cities. I'm not here to say in any way, shape, or form, do I think Atlanta, Charlotte, Miami, New York City, Philadelphia are going anywhere or they're going to struggle tremendously? No, these are big markets, thriving, still lots of jobs. But I do think it will be a shift in terms of increased growth and future development, and population growth will be more prevalent in the secondary and tertiary markets for sure, especially those in warm, desirable climates.
Yeah, so thank you again, Don, and we'll agree with you. I think many of us and a lot of our team members would agree we'd rather live in St. Augustine than Miami as well, right? So that's all the time we have left for today, but feel free to please reach out to, Larry, myself, Don, Jonathan, anyone on the team. If you have other questions, we are not going to have the webinar next week. We're skipping a week, and we'll be back on Thursday, June 11th. So again, reach out to us with any questions, and we appreciate you joining us here today. Have a blessed day, everyone.
Thanks, everybody.